What's happening, friends? Welcome back to Dynamo DeFi. My name is Patrick, and on this channel I talk about cryptocurrency, decentralized finance, and economics. Cryptocurrency markets have had a rough week. It's been very tumultuous, so in this video I'm going to show you several different strategies that I use to earn yield on my stablecoins when I decide to take profits or go risk off on the market. We'll look at strategies for earning yields in stablecoin on the Terra network, on Avalanche, and on Solana. So if you want to find a way that you can earn yield in stablecoins on a specific network, I'll add timestamps down below and you can skip to the network of your preference. All right, so with that, let's get into it. First place that I like to earn yield on stablecoins is Anchor Protocol. So this is my go-to. This is the top dApp, arguably on Terra network by TVL. It's definitely the largest. And Anchor, since its inception earlier this year, has pretty much had a stable 20% APY. That's actually built into the governance proposal or governance of the protocol for them to sustain a 20% APY. I'll talk about in a second how they're able to do that. But you can see it's at 19.41% right now, and that's really where it's been all year. So it's been a pretty good place that you can earn some yield on your stablecoins. Of course, since this is on Terra, you use the UST stablecoin, and you'll need your Terra Station wallet. The way that they're able to maintain 20% is in two different ways. First is people borrow UST, so they provide BETH or BLUNA as collateral on Anchor. They borrow UST, they pay 23% APR, and they're willing to do that because they receive Anchor governance tokens in exchange for paying 23% in the amount of 34% APR. So people who borrow one here are actually receiving a positive APR, which is why they're willing to pay this extremely high interest rate. You're probably thinking, well, that can't go on forever because the emissions will reduce or the value of the emissions will reduce, etc. Anchor has thought of that as well. So people who are staking BETH and BLUNA as collateral, even though they're not earning the staking rewards from that, Anchor Protocol is staking their collateral and earning rewards. So they use that to build up a yield reserve, which is currently about $67 million. And the purpose of the yield reserve is that if they ever need to, if this interest rate from borrowing ends up below 20% or there's not enough people borrowing to pay the yield, then Anchor can tap into their yield reserves and they can use it to guarantee that 19% or 20%. So this is a pretty good place, especially if you're on the Terra network like I am heavily, then strongly recommend Anchor Protocol. In order to deposit on here, all you need is to have some UST in your Terra Station wallet. Then you go to Earn, you click on Deposit, and you just simply enter the amount that you want to deposit and click on Proceed. And you'll pay a small fee, it looks like about $1, and you'll start earning your 20% yield. I think this is a phenomenal way. And if you did nothing else, if you didn't do any of the more complicated strategies I'll talk about in this video, then I think you would still do quite well with your stablecoins. That is Anchor Protocol. But perhaps you want to have the opportunity to earn higher yields, or perhaps you're not on Terra network, you're on Avalanche or Solana. You may want to use some of these other strategies. And these strategies will involve providing liquidity between two stablecoins. So, for example, if we go over to YieldYak, which is the best and largest auto compounder on Avalanche, I filtered to Trader Joe since that's the largest DEX, and then filtered to US since US dollars are the stablecoins that we're going to be looking at. You can see some of these aren't stablecoin to stablecoin pairs, but we have some like DAI to USDT, or USDC to DAI, or USDT to USDC. And basically this is for people who want to use Trader Joe to swap between DAI and USDT, or between USDT and USDC. You're providing liquidity for those swaps. And in exchange, you're earning fees from the swap as well as Joe rewards. Those are the emissions of Trader Joe's native Joe token. And you can see these are pretty comparable to Anchor. 21% APY, 21%, 19%. And that's it for Trader Joe. The way that you would provide these is, of course, first you have to swap to have an equal amount of DAI in USDT, or whichever pool you're doing in your wallet. We'll say we're doing DAI in USDT. And then you can select Get LP Tokens on YieldYak. And it will bring you to this page on Trader Joe, where you see the DAI USDT pool, and then you would need, well, it would do this automatically, but I don't have my wallet connected. You would need, say you entered $100 of DAI, you would need $100 of USDT, and then you would provide those coins as liquidity, and then you can deposit the LP tokens over here on YieldYak. I have another video about how specifically to deposit LP tokens on YieldYak that I'll refer you to if you want a step-by-step instruction on how to do that. So these are pretty good. Again, this is pretty solid plan for stablecoins on Avalanche. I'll definitely be looking at this strategy. If you want to go a bit riskier, but with risk often comes reward, then you could also check out Storm. So this is a smaller protocol, so there is some risk. However, Storm has been audited. So it has been audited. That doesn't mean it's without risk. There's always the potential for flash loan attacks, or even, audits are not always perfect. That being said, you can earn some pretty insane yields on your stablecoins on Storm. And these are just with a single asset. So 63%, 37%. This is not going to last forever, because the only way you can provide a yield like this is through heavy amounts of coin inflation, which will drive the yield down over time. But while it lasts, while this farm has 600,000 in it and it's not larger, you could earn 63% on your USDC. Not too bad. And to do that, you just go to StormSwap.finance. And actually, you don't even need to go to StormSwap because it's single-sided. Excuse me. You can just deposit it directly on here. All right, this doesn't seem to be cooperating right now, but yeah, you can do USDT and USDC on Storm. Those are pretty good. There's some other farms on YieldYak too. You could go to all platforms and search Cycle. Benchy is good, but the yield is lower. Cycle I'm not mentioning simply because, as far as I can tell, it hasn't been audited, but this has a 34% APY. But yeah, if you want to find stablecoin farms in the future, I would just, on Avalanche at least, I would just go to YieldYak and then search for USD or US or even DAI and see what farms are there. There's a lot of good ones available. Those are the stablecoin farms on Avalanche that I'm using right now. Let's see, how is Bitcoin doing? Right around 42,000. If, a month ago I would have been probably pretty happy, but yeah, it's certainly a rocky time in the markets. That's why I want to talk about some strategies for taking profits, because as we bounce back from this dip, I certainly will be paying attention to how much profit I'm taking and managing my risk appropriately. So as you do that, you can still earn yields by using some of these strategies here. All right, so now that aside is done, let's talk about some ways that you can earn yield on stablecoins on the Solana network. The go-to stablecoin farm on Solana, from my research, is Saber. That's app.saber.so. So as in first two letters of Solana. And here we can look at these farms. You can see USDT, USDC is 14%. They have a lot of crazy stablecoins on here. WUST V1, like it has to do with wrapped UST, first version of some bridge. AP USDC, USDC is 20%. I'm not going to go through all these, but you can see this one's 22%. This one's 23%. This one, ACUSD and USDC is 54%. That's why there's so many people in here. BUSD, yeah, so there's a lot of ones, and they seem to be, a minimum of around 20%. Some of them going up much higher than that. So I think this is a phenomenal option if you want to receive yield on your stablecoins. In order to receive yield on Saber, you'll go over to the swap section, assuming you have one stablecoin already, so you can get USDC or USDT on Radium, then whichever one you have, you're going to swap it around until you get the two pairs that you want to deposit. So say we wanted to do this 54% one. ACUSD, USDC, you might want $1,000 of ACUSD and $1,000 of USDC. Swap until you have that in the swap section. Then you'll go to pools. You will select deposit for that pool that you want. And you'll enter the amount you want to deposit, and then you'll be able to select the deposit button here. This button will change. So it says insufficient balance, but this button will change to deposit, and then you'll click that, and then you'll get the LP tokens, which you can take over to the farm, and you'll press stake to stake them here. It's as simple as that, and then you can start earning some pretty nice yields. Those are the stablecoin farms that I'm looking at. There's of course others on Ethereum. You could look at Curve. There's some others on these networks even, but these are the top farms that I'm using, and particularly on the networks that we cover on this channel, which are Terra, Avalanche, Solana, and Cosmos. If you guys know of any other farms you're looking at for stablecoins, definitely comment in the section below. I'd love to get a discussion going on that. And until next time, this is Dynamo DeFi.